Oh man, so a great week continues for Bitcoin, up 23% on this weekly candle, and we are 1 day, 12 hours away from a critical close. If we do not get this close, this could still potentially be a huge trap. Guys, Bitcoin has been absolutely phenomenal over the last couple of days. If you just look at the week we have just had, last Saturday up 2%. We then had a 7% day on the Sunday, despite low volumes. We were able to follow through on that on the Monday, up 9%. And yesterday, Friday, up another 9.6%. What an explosive time for Bitcoin. But more importantly than the percentage movements, we have just reclaimed that critical $25,000 mark. We've spoken at length about the Fed and how they're starting to ease policy. But remember, next week is our FOMC meeting, and the markets are now pricing in, and this is changing all the time, guys. 40% of the market are pricing in that we could even get a pause. Now, if we get a pause, guys, that could be even more reason to run. I'm personally expecting 25 base points, and I think the market will be okay with that. The majority of the market are pricing that in. But what I don't want to see is between now and the 22nd, the next FOMC meeting, the market becoming over exuberant, the market expecting too much, that we're going to get a pause and then Jerome Powell deliver 25 base points. That will be a recipe for a trap and for us to fall to the downside, okay? Remember, markets want to price in what's going to happen before it happens. So if they start pricing in that we're going to get a pause, and between now and the 22nd, which is just 4 days away, we start to see this percentage increase, that could spell pain in the markets, okay? So we do not want to see that, because this percentage will start going up, let's say to 50, let's say to 60, and then if Jerome Powell does a 25, that's going to give us a red day, okay? Because the markets were already saying we're going to get a pause. So this is a major thing we have to watch on the horizon. Now, of course, we know here that the increase in interest rates has been hugely painful. It's been the fastest we've seen. We know that the Fed have started to increase the assets on their balance sheet. Yes, they've just undone some of the hard work they've been doing in their quantitative tightening. They've just undone here in the last week. If I just pop this, if you just look above my head there, look at this increase. A sharp increase of assets being purchased again, back on the balance sheet. Again, more stimulus in the economy. Now, there's this whole debate about, oh, is this quantitative easing? Is it, or is it just a loan? Guys, it's irrelevant. As far as I'm concerned, when the government are back on your side, that is when markets are happy. They're helping liquidity. Remember, when the pandemic was happening, the government was on your side. They were giving out stimulus checks, they were paying furlough payments for anybody outside of a job, and that is why Bitcoin ran. More liquidity in the market. Then they went on this whole process, no, inflation is out of control, I am not your friend. Jerome Powell and the Fed were not our friends, and they were tightening. Now, because of the banking issues, now because of inflation coming to the downside, we are starting to see that they're starting to be our friends again, okay? They would not be doing these kind of things if the markets were moving in the right direction. If there was no crinky bank system, they would not be doing this. Let's now jump back in the charts, and you can see here on Bitcoin, yes, we have broken through 25,000. We haven't had a retest, actually. So again, I know it's a bit of a steep drop from where we're at right now, because we're at 27.4. But even if it did want to come down to 25 for whatever reason, I'm perfectly calm. A retest of the line, especially when it's been such serious resistance. It's been resistance here, and it's been resistant 2 times in this period here. It's fine if you come back and retest it. I know it's not ideal when you're sitting at 27, but that's why I wanted to share this warning with you, because there are a lot of people FOMOing into this market right now. They're doing exactly what I say not to. They're chasing green candles. It's so easy to buy Bitcoin right now. The FOMO catches in with you. Everybody's shouting 30,000, including myself, because I think this move can get to 30,000. I'm going to share that with you. But chasing green candles is going to be your enemy. Not just in this move right now, but in your whole investing career. Do not chase those green candles. If you weren't DCAing before, do not buy at the peak of the green candles. Because guess what we know? Every time there is a crazy pump on Bitcoin, guess what happens? I can show you right now. Anytime there's a crazy pump, you get a bunch of liquidations, okay? You had yesterday, on the Friday, you had 167, just there above my head, $167 million of shorts liquidated. Now, what do you think is going to happen on the other side? Now everybody's piling into longs. Oh, we're going to 30,000. Let me pile in some longs. Let me take some leverage trades. Let me buy it. And guess what that signs up a recipe for? It signs up a recipe for the people to take the other side of the trade and to short from the top. So do not be surprised to see now people who were long before you, and you then FOMO in to come in long, now reverse their position, go into a short to liquidate you suckers from the other side. And you keep doing that. You keep getting yourself wrecked on leverage, on margin. Why? Do not fall for these traps. That is what's slowing down our movements here on Bitcoin, is this behavior. It's experienced traders taking advantage of the less experienced ones by longing when they're shorting and shorting when they're longing. Do not get caught up in that. So right now, when it's obvious that the market is moving, if you weren't DCAing and getting low cost prices in all these periods like I was doing, do not chase these green candles. You're too late for this little move right here. If you're buying for a long-term perspective and you're buying Bitcoin, you're not going to sell it for many years, then it's different. Then you're making a decision of, is 27,000 cheap? And you have to make that as a decision, right? Do I think Bitcoin's going to go to 50 over the next year? Do I think it's going to get to 100, 150? That's fine. But if you're trading this trying to get to 30, that is where you're going to get wrecked. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video, because other people will be looking to rotate short to get rid of some of this exuberance. So again, do not be surprised to see this form a little bit of a trap, and I'm prepared for it. If we do get a little bit of fall, even down to 25, ideally not, but it can come to 24. I know it sounds horrible, but look where our EMA ribbon is. It'll start to come here towards this 24 level, the EMA ribbon, and that will be an area for support as well. Ideally, we just hold above 25 and we keep working our way above that. A few other patterns to share with you guys, and you know we've been monitoring this ascending broadening wedge. Loads of people gave up on this pattern here, but as you can see, it's played out perfectly. This is exactly how an ascending broadening wedge plays out. Nice big move here, breaking out to the upside. And again, I just want to show you the schematic of how these patterns break to the upside, and you can see that they can start to deliver really powerful moves. So we will start to continue to monitor this, breaking through 27,000. Congratulations if you're monitoring this pattern. We've also got this channel, right? We were monitoring this channel. This channel is breaking out to the upside. And again, this is asking for a retest as well. No issue if it wants to come back down, retest, and work its way upwards towards the price target of this pattern, which actually brings you to 33,000. Now, 33,000 is interesting because where the resistance lies, if you look at this clump of resistance here before we fell to the downside, that is sitting between 28,000 and all the way to the upside at 32,000. So that's the region I expect us to fill this gap to the upside quite quickly. I do expect that. Now, do not be surprised to see, because so many people are just expecting us to go boom straight to the upside, do not be surprised to see them taking shorts from the upside to trap you guys. That is why, like I said, if you weren't in these positions, or if you're not holding for a long-term portfolio perspective, then you're going to get wrecked. Do not just try to take this trade now from 27 up towards 32, 33. Some of you might get lucky, but the more of you who pile those leverage trades on, you are just ammunition for those short sellers sitting at the top to sniper you. And guess what? It will just throw us back to the downside. Let's also get an update on this head and shoulders pattern again, breaking out very nicely from the neckline here at 25,000. But again, do not be surprised to see a head and shoulders pattern come back to test the neckline. That is very normal. Again, let's take the measured move and see where could this move play out. We can take this measured move from the neckline down to the peak point at the head, apply that to the point of breakout. And what you will see straight away is that this gives you a price target, again, similarly, in that range of around 35,000. I think 35 is a little steep. We've seen the other chart patterns and how they've played out as a clump of resistance around this area, but definitely to get to that 29 to 31, 32 range is definitely a possibility for this move. Now we got to look at our all-important weekly chart, 1 day and 12 hours, and I absolutely cannot wait. From the moment we fell in November 2022, I was looking at this as FTX fell, and I said, guys, how are we going to get this weekly EMA ribbon back? It's going to take a long time, but until we get this weekly EMA ribbon back, any move we see, because I remember people got excited from this move. Remember this move in June? We fell in June after Terra Luna all the way down to 17,600. And then we worked ourselves up somehow to 25,000. Now, in that period from 17,600 to 25, a lot of people thought this was it, here we go. No, we were miles away from our EMA ribbon. Similarly here, miles away from our EMA ribbon. Even when we were taking this move here, I was still worried. I was still worried because the bears were showing some strength. Now we reclaim our weekly EMA ribbon, and I want to see the close. I don't believe it until I see it tomorrow. I'm skeptical of what crypto does to you. I want to see this close above. We're miles above it right now, which is brilliant. Let's go get that close above. Let's open up the next weekly candle on Monday, nice and green, and let's now turn this bear market away. Say we're done with it. We can move sideways and start working on our move to the upside in towards our next bull market at some point. Now, do I think that's going to happen straight away? No, I think there's a lot of issues for us to fix. But if the Fed start to embark on a tightening journey, maybe not immediately, but if they show signs that within the next 6-7 months, they're going to have to stop these interest rate hikes, they're actually going to have to do their first set of cuts, they're going to keep printing, then things are going to look good for the markets, and particularly Bitcoin, which is of course a function of liquidity. Quick glance here at the dollar index, and they are now posting a negative week, which is fantastic. We need to reject this from the EMA ribbon and send this dollar index to the downside. The US 10-year having a horrible week as well, coming off from just a couple of weeks ago sitting above 4%, now sitting at 3.4. This is showing that risk is starting to rotate a little bit on, given some of the easing rhetoric we've seen. And this is what we need to understand as crypto investors. If you start to miss, if you sit there as a permabet, I tweeted to the same effect on my official Twitter at @RealIjaz1. Make sure you go follow me there as well. I said, if you sit out of this market, if you're just sitting there being a permabear because your favorite influencer told you this is coming down, this is how you miss out in crypto. And guess what? You're going to be caught, that person sitting there, bitter, calling crypto a scam, falling out of love with it, finding someone to blame, blaming your influencer, blaming somebody else, blaming whoever you want. But the reality is, this is the same for the S&P, it's the same for the Nasdaq, it's the same for any asset class. The majority of returns happen on a select handful of days and select handful of weeks. If you miss those weeks and you're not in the market on those weeks, you will miss the returns of Bitcoin. I'm not sure why so few people understand that. This is why the majority of my portfolio always sits in a long-term hold portfolio, and I keep a small part of my portfolio as a trading account where I'm in and out of the market. Time in the market is much better than trying to time the market. Very, very important, guys. Hope you guys are enjoying this move. This is a great time to be in crypto, and that's the reality of things right now. What a beautiful time to see traditional finance struggling, and the ultimate reason why crypto was starting to stand ahead of the crowd and say, this is why we exist. And we're seeing money flow in because people are starting to lose trust in the banks. Money is starting to be printed again. And this is the vicious cycle, which is what created decentralized money. Thanks for watching, guys. Smash all likes. Don't forget to subscribe. Have a great weekend, and I'll see you in the next one.